Hello, everyone. I'm Heidi Butler, and welcome to our fourth quarter investor live stream. In considering the performance information discussed today, prospective investors should bear in mind that past performance is no guarantee of future results, that there can be no assurance that projects will achieve projected results. In addition, actual future conditions may require actions that differ from those contemplated at this time. Prospective investors are cautioned not to place undue reliance on these projections. This presentation includes certain non-GAAP financial measures. Certain statements such as believes, anticipates, plans, intends, expects, target, preferred, and words of similar import constitute forward-looking statements. Such forward-looking statements involve known and unknown risks, uncertainties, and other factors that may cause the actual results, performances, or achievements to be materially different from any results or performance in the future. Achievements expressed or implied by such forward-looking statements. On this live stream, we're joined by Jamison Manwaring, co-founder and CEO of Neighborhood Ventures, and John Kabrowski, co-founder and president of Real Estate.
That's a mouthful, Heidi. Thank you for reading that. Hello, everyone, and thanks for joining us for our fourth quarter investor live stream. We are excited to share more details about what we're doing here at Neighborhood Ventures. As all of you know, 2022 has been a rocky year for the stock market, but multifamily real estate has performed well despite global uncertainties. Each of our projects has delivered at or above our expectations, and we look forward to sharing these details with you later in the presentation. Before we jump into our financial performance, I want to share some other important items with you. For the past year, our team has been building our own proprietary investor platform and dashboard. For the first 5 years of the company, we've utilized a white label licensed software to handle our crowdfunding and investor dashboard. But we determined that to give our investors the best personalized experience, we needed to invest in and build our own technology. I want to thank our entire team who worked relentlessly on this project, including our lead programmer, Colby Butler, Heather Andrews in investor relations, and Heidi Butler in financial operations. This was a team effort, and we are extremely proud of the outcome. We want you as our investors to have a frictionless investing experience, to make it easier to analyze your investments through intuitive performance charts, and easily find tax and other important documents. And now that we've built out our own platform, we look forward to working to ensure you have the best online investing experience going forward. Our team continues to develop as our company matures and grows. We are excited to introduce you to the newest member of our team, Dimitri Bubran. Dimitri has spent the last 10 years as an accounting and finance professional for real estate investing firms nationwide, including BAM companies in the Midwest and AIM here in Arizona. So far in his career, he has accounted for over $1 billion of real estate activity and development, and is now the financial controller at Neighborhood Ventures. We're really excited to have him on the team. We love keeping you informed and updated. Please follow us on your preferred social media platform to stay up to date on important items in the news, the progress of our projects, and other investor events. One of my favorite ways to connect with you, our investors, is through our weekly podcast, Kiss My Assets. On the podcast, we spend time discussing current multifamily trends and delving into other relevant topics. We also love having our investors come into the studio and share their stories with us. If you'd be interested in joining us for an episode, give us a call or email Amanda@neighborhood.ventures and we'll get you in the studio. A few upcoming events for you to note on your calendars. Distributions are available on the 10th of each month. These are found under your new investor dashboard under the Cash Available button. We are excited to show you the amazing transformation of Venture on Central. It is in the final stages of renovation, and we are planning an investor open house for November. Stay tuned for more details, and we hope to see you there. We are excited to announce our second annual Investor Holiday event. This is one of my favorite events of the year, when we are holding it on the evening of Friday, December 9th at our office space, The Grid, in Uptown Phoenix. Come enjoy food, drinks, and music, and collect your personalized bottle of Neighborhood Ventures wine grown and bottled at Carlson Creek Vineyards in Wilcox, Arizona. Now I would like to give everyone a brief update about the Neighborhood Ventures Fund. The fund is open to accredited investors and offers a 12% preferred annual return. The fund is invested in each of our multifamily projects from 2021 and 2022 and offers a portfolio diversification and the ability to invest larger dollar amounts. The fund is expected to close fundraising sometime year closed-end fund, and we expect all fund assets to be liquidated and investors to receive their principal and returns by the end of 2025, if not sooner. In January, the fund began paying a 4% annual cash return, and then we quickly increased in April to a 5% annual cash return. We expect cash returns to increase over the next 3 years as the remaining projects begin generating cash flow. We anticipate Venture on Eldon will reach its cash flow stage in Q1 of 2023. Venture on Route 66 and Venture on Central are estimated to begin cash flowing in Q2 of next year. And we expect Venture on 12th Place to begin cash flowing in Q3 of next year. I also want to take a minute to discuss the broader economic environment and how that impacts us at Neighborhood Ventures. As we all know, inflation is something that has been plaguing our economy. This year alone, the Fed has raised interest rates 5 times, and we expect them to continue raising interest rates until inflation comes down. The Fed's actions of increasing interest rates are its biggest tool to slow down the economy and decrease the money supply as it tries to bring inflation into the target range of 2% annually. Higher interest rates have a large impact on housing. With interest rates approaching 7%, it's no surprise to see buyers pulling back from purchasing homes. We are now seeing larger inventories of homes for sale, and median sales prices have started to decrease. One impact of higher interest rates on multifamily is that apartment buyers who use financing will now have higher debt payments. This tends to drive down the prices of apartment buildings in high interest rate environments. So the Fed's actions are working and they're bringing prices down. And although costs for some items are still increasing, rent increases have begun to level off. This was after rents increased 20 to 25% over the past year. With the stock market down 25% year to date, multifamily has proven to be a strong asset in this environment. We expect multifamily to continue to perform well for many years as the cost of home ownership drives more people to continue renting longer. We continue to be opportunistic as we look at potential new projects. We remain committed to our core strategy of finding underperforming properties in core areas where people want to live. Before I pass it over to John, I wanted to mention he was recently featured in the Western Multifamily magazine for his article on why multifamily fundamentals remain strong in the Phoenix metro area. I recommend you check that article out. It's posted on our website. And the insights there are that he draws both from Neighborhood Ventures and his other company, ABI Multifamily. So I want to pass it over to you, John, to get your update.
Thanks, Jameson. Looking forward to the holiday party. It's always good seeing everybody. And I'm looking forward to get my bottle of personalized wine. Looking at multifamily trends, we are seeing more groups push to build multifamily properties in previously unconventional areas. In one of the most housing constrained markets, California, they have passed 2 bills allowing housing to be built on underutilized commercial zone land and converting commercial buildings to multifamily. In Mesa, we transformed Venture and Country Club from a hotel to short-term housing. We are working with the city towards rezoning it into long-term housing. Solutions like this help to increase the supply of housing and balance out the rents. Although we have seen a continued trend of rent increases, it looks like rents are finally peaking and have come to a plateau. In the past year, median rents in Phoenix have risen by 45%, while the national median increased by only 28%. Phoenix Business Journal reported that Arizona had 4 cities in the top 100 for rent growth in the past year, with Phoenix ranking at number 38. Though we are growing quickly, the cost of living here in Arizona is still relatively affordable when compared to other large national metro areas. Phoenix continues to see unprecedented population growth and is ranked number 8 in the nation. All right, our employment opportunities have helped drive this incredible growth. Within Arizona's manufacturing industry, jobs have grown at a rate of 7.2% year over year, nearly double the national rate of 3.8%. Now I'd like to shift over and give some updates on our venture projects. Our newest property, Venture on 12th Place, is now in full renovation mode. If you get a chance to drive past it, you'll see a substantial amount of renovation already completed on the exterior of the buildings. We're also assisting in relocating many of the previous residents as we shift our focus to interior renovations. Venture on Central's final set of appliances were delivered last week, and the property is wrapping up renovations. We're expecting the last 8 units to be rent ready by the end of the month. We're on track to transition to full leasing mode. Our team is attending to all the final details, including cleaning up the landscaping and adding pool furniture. At Route 66, we're completing a major plumbing renovation and installing bathroom upgrades. We discovered that some of the sewer lines needed replacing beyond what the past owners had done. So our construction team was able to quickly address this before we got further into our interior renovations. The focus is now on shifting to painting the kitchen cabinets, adding a tile backsplash, putting the first set of buildings back together. Venture on Broadway is not moving as fast as we initially had planned. Its timeline has been extended because of the city of Tempe's issues and utility permits delays, as well as supply chain issues. Our contractors and tenants are working together to push through these delays. We still expect to turn over Dunkin' Donuts suite to the tenants' interior renovation team by November. We're on track to have our tenants in as soon as February. James, you want to talk about some of our existing projects and stabilize cash flow?
Yes, thank you. So jumping to some of the other projects, we are working on stabilizing Venture on Eldon, and we currently have 9 of the 16 units filled. The average rent at Eldon is $1,980. This is well above our original expectation of $1,500. So we're really excited what we're seeing there. We have several properties that are stabilized and are currently generating cash flow. These properties are each paying an annual 6% distribution to investors. Start out with Venture on Country Club. It has an average rent of $1,100 per operating unit in September. We are engaged in the rezoning process with the City of Mesa using a PAD application at the suggestion of the city leadership. We expect the property to be rezoned for multifamily use sometime this year. Venture on Mountain View's average rent is $1,195 per unit with an average market rent of $1,290. We plan to increase rents to the market rate as leases come up for renewal. Its occupancy has also increased since last quarter and is now at 96%. Venture on Williams occupancy is at 95%. Its current average rent is $1,540 per unit, and the market rent is $1,565 per unit. Venture on 19th's average rent is $1,177 per unit, with an average market rent of $1,420 per unit. We are currently 93% occupied at 19th. I'll turn it back to you, Heidi, and we can do Q&A.
All right. So our first question is obviously the most important for me. Greg asks, can I get my bottle of wine mailed or delivered?
I think that's probably a Heidi answer.
Yeah, so after the event, we'll send out an email to all our investors to submit your address, and we will get the wine mailed to you.
We do want to have as many investors come to the event as possible.
Absolutely.
Because it's kind of an excuse to get you here to see you. We have that unique advantage of being here in Arizona. So we want to put on a great event. It'll be worth your time to come to make a trip to Phoenix, get your gift from us, say hello. And if you can't make it, we will get it to you. We'll ship it to you.
Good.
Perfect. Another question that came in anonymously. What is your plan to launch your next project?
I think it's my crow here. We're always looking. And I can tell you that we're probably passing up on 2 or 3 projects a week now. And part of it's because there's a bit of a difference between what I call the bid and the ask in the market, where some projects are going for, or the sellers want a higher price than we think they're worth today. And I think that's going to adjust over the next quarter, and we'll be able to find more projects. And we are looking for possible new build projects. So we're looking for things all the time, but it's not just, it's not just important for us to buy projects, it's important for us to buy good projects.
I just want to add on to that. So for the last 18 months or so, John's been talking about how the cost of renovating an older building is almost getting at parity with building from the ground up.
Right.
And as that cost gets closer, he's helped me to understand, as I'm kind of the rookie over the last 5 years in real estate, that you may as well build from the ground up. And so we're looking for those opportunities to find a lot, to find the right location. And we've had 13 projects now where we've done significant renovations that gives us the experience to know how to take on these projects. And so we're excited about bringing a project like that to our investors at some point. And we will also continue to look for the value add projects where we take an existing property and reposition it. But I think in talking with some investors about the ground up building, they're excited about that opportunity. And the other great thing that does is it adds additional housing onto the market, which is what we need in a market like ours, where people continue to move here and prices continue to move up. Right. And then the other thing that John touched on is we do pass on a lot of deals. We're looking at deals every week. And the other thing we believe is you make your purchase, you make your money, your return on a purchase right at the purchase. So if you're going to do a real estate deal, you have to make sure you buy it right, do everything right after that, but we don't want to overpay at the purchase.
Thank you guys both. So our next question comes from Dan. Venture at Mountain View is now approaching the 2-year mark. Any updates on your plans to sell?
Maybe. I mean, we like that project. It's worked out well for us. And it's probably going to be something we look at over the next year to sell. It's worked out really well. And I can tell you that it's stabilized. It's cash flowing. We've got a good loan on it. So everything's right in the right place right now. And it's a matter for us of, knowing, there's a saying in our business, hogs get fat, pigs get fat, hogs get slaughtered. I always get that backwards. So we want to hit that just right. And right now I feel like there's still a little bit of more room in that project, even in light of the way the market is.
And we're excited. We saw the occupancy has moved up the last few months. So we're now 96% occupied. Last I saw in Arizona, the average was 94% occupied in apartments, 94, 95%.
A little bit of a drop in occupancy in Arizona, and I don't know how that happens when we have so many people moving.
Some of it was over the summer, I think, with seasonality.
And that we're getting back to normal seasonality.
Yeah.
Third quarter is always slow.
So when we have a project like Mountain View that's generating good cash flow, it's fully occupied, that is the right time to sell it. And but we have another year in our 3-year term. So we have kind of some runway. And to John's point, we will definitely look at selling it as we think we can get the most value for it.
Great. So this is kind of a 2-part question I'm going to ask here. The first part is, are you concerned about not being able to sell a property at the right price when you want to sell? And then the follow-up with it is, are you concerned about not being able to refinance a property if you need to?
Always. Always. Yeah, luckily, like Jameson said, we bought our properties right, and we refinanced several of these as soon as they were stabilized. So we actually have really good debt on some of these properties right now, which is making it work really well. The other good thing is that we've got the right properties in the right neighborhoods. So we might not see the same pace of appreciation that we saw before, but with the rent growth we have in Arizona, with the stable influx of people and the job growth, I'm very comfortable with how things are going to go for a while. I say it all the time. I'm glad we're in Arizona.
Yeah, and we are seeing continue to see buyers come into Arizona who want to buy apartment buildings. whether it be a 1031 exchange from California or money from the Midwest or people who are here who have sold a building. And if the building is stabilized, especially if it's been renovated and it's what we call a turnkey asset where they can buy it and they know they don't have to do anything for 10 years, any renovations, a lot of buyers want to buy those assets. So you're not seeing the same thing with apartment buildings as you are with single family homes, because apartment buildings have a different buyer. They're a financial buyer. They might be selling a building, so they need to exchange into one. And although with single family homes, we're seeing the inventories up and prices have definitely kind of plateaued. We see some of that with multifamily, but it's a different thing.
It's an affordability issue too. People, what are the stats we read? 40% of the potential buyers for single family homes nationally have been priced out of buying a home. Where multifamily, again, we're in Phoenix. We have rent growth, we have strong occupancy, we have good fundamentals. What's starting to happen is on a national level, the traditional buyers, investors of multifamily are looking at all the options. And obviously, our hearts go out to people in Florida, but that's not a good option to buy right now. Texas is slowing down quite a bit. Denver's not there anymore. And certainly, the California market with rent controls are causing some pause in people's desire to invest in that market when your upside's capped. So Phoenix is looking better and better in that kind of environment. And we have a whole bunch of things coming up in the next 4 months now. Phoenix Open, the big car auctions, spring training, the Super Bowl.
Super Bowl. That's a big one.
All these things are going to drive more and more attention to Phoenix. So I'm just saying, in general, we've seen these things happen, but rent control hurts. At the same time, in other markets, at the same time, rent increases solve our problems. They make up for the interest rate increases and for any slowdown in the market.
Great. So our next question is, do you always go in as cash buyers, or are you using some debts on your project?
Yeah, we use debt. We use debt on our projects when we go do the original purchase. We don't lever them up as high as the banks want us to, because we're conservative about that. And our goal is, once the project has been renovated and repositioned, we're typically under 60% loan to value. So that means we have at least 40% equity. A lot of places, they will lever it up beyond that. And John and I are both conservative, as to his point. We want to easily make that mortgage payment. We don't want to, run any additional risk by levering up. So that's how we structure it. We keep the debt low,
and we also have good reserves. One of the have reserves on our properties makes us sleep better at night and know that we're fine. Yep.
Great. Another question: are we close to closing or selling on any of our projects?
Good question. We have some great questions here. Love it. Keep it coming. Yeah, short answer is yes. We're close. Someone already asked about Mountain View. Mountain View has about another year of remaining on its term. And, some of our investors have reached out to us and said, hey, you should probably sell some of your buildings. And then we've heard from others who said, don't sell your buildings. I'm getting my good cash return.
Right.
And so, we're going to listen to everybody. Ultimately, we're going to make the decision, but we're going to try to hold the building until around the term that it's up. And as you saw on the presentation, each of the buildings shows the timeline. So the next few projects to come up, Venture on Route 66 is coming up on its 2-year term in the spring and around May. And then after that, it would be Venture on Mountain View in December, as John already alluded to. It's not to say that we will always go for the full term, but we try to, because we're not trying to flip and make a quick buck. We're trying to keep our investors happy, hold them, wait until the right time is to sell, get these properties in a good position, and then sell.
Yeah, and maximize return. And if I could just add one more thing to it. One of the things you got to remember about with markets, when the interest rates shoot up, some of the buyers in the market, or just people in general, aren't sure whether that's going to be the new norm or about to change and go back. So just like anything else in life, it takes a little while before these things are accepted as the new norm. And right now, 5.5% interest rates on multifamily projects, the market's starting to accept that's a new norm. So our plan was, and we worked on it. We thought about it for a long time. We talked about it. With rates shot up, it didn't make any sense to sell anything at that point because people thought that interest rates are too high. Now that our rents are increasing, our properties are full, and the world's accepting what the new standard is of rates, we can look at these things again.
And we also know, as apartment buyers and the other people who are buying apartments from us, that there's more people renting. When they go to look to buy a house now, not only are those rates higher, but the house prices are still elevated. And so the total cost of buying a house has priced a lot of people out. And that's why multifamily continues to be an asset. People want to buy these. People want to own apartment buildings in Phoenix. I did just see one note about our poll. So if you haven't voted in the poll, how many votes have we got so far? Can we see?
We have 37 out of 50.
Okay, so 37 votes so far. That's great.
That's a good sample
If you
size,
haven't
so.
voted, let us know if you'd rather come to our open house on a weeknight, coming home from work, or would you rather have it on a Saturday morning at 9 or 10 o'clock? And what's easier for you? The next open house we're planning to do is Venture on Central here on Central and Missouri. So next question.
Yeah, so we've got a great question from somebody in New Hampshire. They're invested in our national project, and they want to know if we're going to be offering more national projects and why we really only focus on Arizona projects and Arizona investors right now.
I can take a stab at that
Yeah.
first. So
Okay.
we started as an Arizona company, and we used the Arizona crowdfunding law to do our first 11 projects. And that meant you had to be an Arizona resident to invest with us. And then with Venture on Country Club, we left a little portion of that open to national investors, and we had to do it through a different securities law. And we posted that on a regulation crowdfunding portal called Small Change, and we raised about $600,000 from national investors. So that's probably where this investor comes from. Right now, our Venture on 12th Place has sold out in Arizona. We sold out $2 million in total, fundraised 230 investors, but we did reserve a piece, about $500,000 for investors outside of Arizona. So that's open right now. We do expect some exciting things to be announced early in the year, where we will be doing more nationally. We've been focusing on Arizona for several years. We love Arizona, but we do have a lot of requests from people outside of Arizona who want to invest. It is a little harder because you have to go and work with the SEC, Securities and Exchange Commission. I worked a lot with them when I was at Goldman Sachs. I love working with SEC. So they're just a bit more complicated, and you want to be ready to take that step. And we're looking to take that step here fairly soon next year.
But Dan, so the other part, I think, of that question, we know Arizona real estate. I know Arizona multifamily. So again, happy to be here. Glad we're in Arizona. This is a place where you're going to see the best returns right now in the country for multifamily. So that's why we're investing here. And it's also better for us because we're close to our assets.
Let me follow up with that because I'm sure we have another question on it. Do we ever plan to expand outside of Arizona, or do we plan to just stay in Arizona long term?
So we do plan to expand nationally from getting investors involved.
Okay.
And we also do plan to expand over time outside of Arizona with properties, and John can speak to this as well, but to John's point, we believe you need to have a deep level of expertise in an area, in a market, before you go buy a property there. So if we owned a property in Dallas, you need to be on the ground a lot in Dallas. You need to make sure you have the right vendors. And
construction people, we have our own teams here. Our own management teams we're familiar with. The whole operational thing, so we can be a lot more effective here.
So when you go into a market, you kind of make a commitment to it, and we do expect to do that over time.
Yeah.
How about Tucson? That's another question we have. Do we plan to expand into Tucson?
I love Tucson. I was there yesterday. It's and again, if anybody in Tucson watching this, nothing against Tucson, but the reality is the appreciation in both rents and value, because it's tied to rents, is significantly stronger in metropolitan Phoenix. So Tucson has good cash flow, because things always sold at a higher cap rate, and will continue to sell at a higher cap rate than Phoenix because cap rate's a function of risk. But the reality is we can be more effective here in Phoenix. Why do we look at Flagstaff? Because Flagstaff was such a tight market. It was difficult to find anything, and the few things that sold, we recognized right away the rents are well below market, and we can do a better job on it.
Yeah, another great question here from Nick. Am I able to invest through an LLC?
Yeah, good question. Short answer is yes. A lot of folks use a LLC to invest in. It keeps things a little bit cleaner from an accounting standpoint because that LLC might only purchase properties. Other folks have an LLC that is owned by an IRA. They can use that. You can also use an IRA, which is something a lot of folks don't realize. You might have some money in the stock market through your retirement account. You want to get it out of the stock market and put it into real estate. You can do that through us. We have a preferred partner, Directed IRA, who can help you set up your account. I'm actually speaking at their summit here in Scottsdale on Friday. So if you want to go learn more about Directed IRA, they have a big summit here at Orange Tree Resort in Scottsdale. You might want to go to that. And we can accept funds, not just from them, but any IRA.
Yeah, and I'm just going to put a small plug in here. If you're interested in investing with your IRA, check out our podcast, Kiss My Assets, where we talk a lot about how it works investing with your self-directed IRA and how to get started in it.
Great point. Yep.
Another question here. Have you considered investing in rental single-family homes? And do you plan on investing more in short-term rentals?
Okay, so a couple different categories. There is the build to rent, which are properties that are built like single-family homes for rent, and I love that category because they do really well in our market. The problem with that is they are substantially larger than we are prepared to be buying right now. Those are probably 200 to 400 unit properties. But yes, I'd love to do that. Single-family home markets and family homes in general, it's difficult. There was a time in my life that I owned a bunch of them, and I can tell you that from the operation standpoint, how each house has got a different faucet, a different type of doorknob, a different type of shower valve, all these things.
A different location.
Different location, right? So your guys are running all over town working on them. It's difficult to make sense of that. And obviously with the run-up of values of single-family homes in Arizona, at the moment, it's kind of tough to make sense out of buying homes even in bulk. And obviously, it's not just a cash flow. You have to look at the back end return on the value appreciation. And that's probably leveling off a bit in all the markets with interest rates being up. So short answer on that is I just don't know how to make sense of it right now for us. And we can be very effective in in our core areas of investing.
And the second part of that question about vacation rentals, we like that business. It's a lot of work compared to owning multifamily, but in some cases it makes more sense from a cash flow standpoint. You know, if you're in an area where there's a lot of people who want to stay there, we had a property in Old Town Scottsdale, for example, that did really well as a short-term rental. We're open to doing that. We know how to do it, and it just depends on the property. But we're not averse to properties that would do well that way, to buy them and operate them as a short-term rental.
Great. One great question here as well. It sounded like the fund was closing this year. Can you give me more details about who can invest in it?
Yeah, so the fund, we've been fundraising since last year. We have over 40 investors involved in the fund. I think all of them were investors who invested in our single projects and then wanted to invest more capital, and they're able to invest it in the fund in a diversified way. So we actually had some investors who requested that, so we created it, and that's why it came about. If you want to invest in the fund, you need to look at doing it soon. $50,000 is the minimum investment, and you do need to be an accredited investor, which means you have to have over $1 million in net worth, not including your primary residence, or over $200,000 a year in income by yourself, $300,000 a year with you and your spouse. So it's a small group. Most of our investors are not accredited investors, so we love the $1,000 investor as well, but we created this fund because we wanted to give people the opportunity to invest a little bit more. We expect that once this fund wraps up in fundraising, we will launch another fund, hopefully Jan 1 or sometime in January, so that there's always that fund structure for folks to invest in.
Fabulous. The one last question we're going to end on here. We had a question about the December investor holiday event and asked if you could review the details of the event again.
So it'll be here at the Grid. It'll be, we have a great space here that has a garage door that opens up, and we'll have music, and we'll have food and your investor gift. I think it'll start around 5:30 or 6, something like that in the evening. We'll have music, and we'd love to have you come. More details will be sent out to you. And the thing you've heard about is, if you weren't an investor last year, we have a specialized bottle of wine that has your name on it. And I know some investors have began collecting those.
Yeah.
Some drank it the first night. So we won't say if anyone here what they did with theirs, but so that's something we all look forward to, and we've been working on that. Already. Yeah, December 9th. So that's Friday. So that's the last question.
That's our last question.
So yeah, maybe I can just wrap it up. So wanted to thank everybody for joining us. We love these events and look forward to them. They're a little bit stressful because there's always these technology things that have to happen, but we have a great team. Thank you everybody for your work. Our team, Oakley, Amanda, Heidi, Heather, Colby, that are downstairs too. So I want to thank everybody for your work. Thank you all our investors for joining us. We appreciate your support, and we look forward to seeing you here in the next few months at our upcoming events.
Yep. Thank you.